Many of America's largest companies logging a fourth straight quarter of shrinking profit and slow sales. So where should you invest in this slow growth environment? I'd like to bring in Global X Fund's Research Director Jay Jacobs, along with Shaffer Asset Management President and CEO Dan Shaffer, and welcome to you both. So let's talk about this. Okay, the Dow was up slightly today, Jay. What do you do? Where do you go? Because it seems as if we've really been watching revenue fall for companies, not just this quarter, but for a series of quarters, which does not bode well as we go forward.
Right. I think we have to be very selective in this environment. If you look at the broad market indexes, the valuations do not look very good right now, basically multi-year highs if you're looking at PE, some other ratios. But if you look at specific segments, like the healthcare segment, within the technology segment, we do think there are growth opportunities. Within healthcare, first of all, the earnings have been very good. 81% of the reporting companies have beaten analyst estimates. But also within the healthcare segment, there's some really nice tailwinds in specific areas.
Dan, do you agree with what Jay's saying? And if so, are there specific companies that you can highlight as?
Well, I don't agree. I'm very bearish. I think that we are in a very dangerous spot right now in many cycles that are coming in 2016 and 17. I think that protection is so cheap, everybody's convinced that the markets are going to go up forever, which we all know is not going to happen. And I see a lot of similarities to the 1920s, which is very dangerous, where the Federal Reserve took action and made things happen that are out of the norm. So right now, the correlations between gold, currencies, interest rates, the stock markets, it's so out of line that even the hedge funds, money's being pulled from them because they can't figure it out.
80-something billion was withdrawn.
Huge amounts. And endowment funds are not performing because they're in these funds. It is so out of line that right now everybody's got their finger on the trigger that when it does start to unravel, they're going to unload. So
I'm going to pick up what you're saying.
Yes.
I'm going to challenge Jay here,
okay,
because I'm older than you are, Jay, so I'm kind of with him. I'm a curmudgeon who's worried about the future. It feels like '07 to me, not the 20s. But, when you look at opportunities here, yes, healthcare might be a sector that's performing well, but then look at what's happening to oil, and that reflects downward spiral for growth globally and in the United States, doesn't it?
Well, not every sector is correlated to oil. Certainly the energy sector is going to be affected by lower energy prices, but you can look at something like healthcare. Oil is not really an input into that sector. It's technically, a pretty counter-cyclical sector. It has really nice tailwinds that are not being picked up by the market, such as the increasing age of the population. People are getting older, they need more health care, and there's services out there, whether it's senior care facilities, pharmaceuticals, that are going to do very well from these trends.
So then where do you go to protect yourself? Do you buy gold? Do you, where can you park your money?
I think it's a little too early to buy gold, and gold doesn't pay interest, and there's no income. So it's not really an investment to me. It's more of a scare asset. I think with some of the investments that are available in ETFs, that you can buy the VIX, which is the volatility index, which is extremely low right now. And you can buy it on all different instruments, too. And you can also hedge yourself. And I'm not saying to sell stocks, okay? But I'm hedged. I run a long short. So I can short the indexes against my positions in case the market does go down. So those are ways to invest. The areas to stay out of, I think the bond market is way overvalued. I think interest rates at zero and the economy not even going anywhere is a clear sign. Crude oil being down at the 40s level is a clear sign that things are not strong. So we're all fooling ourselves, and eventually this will end.
And on that cheery note, the party's over, and our discussion is over. Thank you both for joining us.